Presentation of TFNN. Live at TFNN. Breakout Investing. With your host, Ken Shreve.
Hey, happy Tuesday, everyone. My name's Ken Shreve. Welcome to another edition of Breakout Investing on TFNN. The number to use to talk to me today, if you want to give me a call, 877-927-6648. Usual reminder that my show airs every Tuesday and Thursday on TFNN from 3 to 4 Eastern. My show is also available as a podcast on iTunes, and don't forget you can listen to all TFNN programming on your smartphone. Just plug those earbuds in, type in tfnn.mobi in your smartphone browser, and you can listen to the stream that way as well. If you want to look at charts right along with me as I go over them on the show, you can do that on Tiger TV right on the homepage of TFNN.com. The show is carried live Tuesday and Thursday on Channel 1, and it's archived on Channel 13. And you can also watch Tiger TV now with your smartphone as well. All right, speaking of Tiger TV, let's take a look and see where we're at here in the market. Got about 50 minutes left to go in Tuesday's session. I'm going to refresh my chart of the NASDAQ composite here, and I got to say, just another extremely impressive performance by the market today. Right now, it looks like we have the NASDAQ composite all the way up near its session high. It's only down 2 points now to 3,076. It hit an intraday low of 30.50, so it's about 26 points off its intraday low, and its high today is 30.60. So its high is 30.76, so pretty much up at its session high right now. Another very resilient performance by the market today. Market got spooked before the open. I think it was the CEO of BHP Billiton, ticker BHP, on the New York Stock Exchange, Australia-based miner. Basically said that iron ore demand in China is going to be dropping to the single digits after pretty solid growth in that area of the world. I think it's a pretty known fact that China's economy is slowing down. GDP topped out at, 12% growth thereabouts. Now it's tracking at about 7-8%. So still strong growth in China. Slowing growth in China is nothing new. That is a known story in the market. I think if we eventually do come in here, which is, judging by today's performance, still not clear that it's going to happen, but when we do eventually pull back, it's just going to be profit-taking. A lot of extended stocks out there. I've been talking about that theme quite a bit in recent weeks. When I go through my growth screens over the weekend, back in December, early January, mid-January, my screens were teeming with stocks that were flexing their muscle, poised to take advantage of newfound market strength. The issue now is that the market has been running higher for three straight months. And when the market keeps running higher and individual stocks keep running higher and they don't pause and digest gains along the way, they don't pause and consolidate, you get a big crop of extended stocks out there that are very risky to buy at current levels. And they're a dime a dozen right now. So I've been content with my Ultimate Growth Stocks model portfolio. I have 12 names in there right now. I'm letting those names work. I think I've got some potential big leaders in there. I'm in no rush to sell them, but I'm not actively going out and looking to add new names to the portfolio at this time. I think the risk still outweighs the reward in the market. That said, it doesn't mean that I'm going to be in a rush to sell everything I have and just move to cash again. And today's performance by the NASDAQ and the other major averages tells us that there is still underlying strength in this market. So NASDAQ composite up near its session highs today, only down about 2 points. Let's go take a look at the S&P 500. and we'll see that that is down about 3 points now, 0.2% to 1406, 1407 thereabouts. It hit an intraday low of 1397, intraday high of 1409. So only about 2.5, 3 points from its intraday high. S&P 500 bouncing back after early weakness, and check on the Dow as well. And the Dow Jones down 50 points, 0.4%, underperforming a little bit to 13,188. So we talked about the comments from BHP earlier today about slowing iron ore demand in China. You know, I mean, again, is this really new news? I mean, we know that China's economy is slowing down. So I don't think that was big news, but still, you know, that news did fuel selling in a lot of related companies. Let's take a look at Cummins today, CMI. This is a company that makes engines for trucks and heavy equipment. Shares of CMI still trading near its session low today, down $5.15. That's a 4% decline to $122.85. See, the stock is still holding above its 50-day moving average here, which is a longer-term support level at around $115. I think if the market eventually does come in here, and I still wouldn't be surprised to see it happen. For example, if the NASDAQ eventually decides to come in 5, 6, 7% off its recent highs, what you're going to see is a lot of stocks like Cummins probably come down to their 50-day moving average and find support. I think the 50-day moving average for a lot of stocks out there is eventually going to turn out to be a pretty key support level, whether it's a name like Cummins or just any strong performing stock out there that has been outperforming in recent months. That 50-day line should ultimately be a support level. If the market does come in sooner rather than later, I'm not expecting a long, drawn-out pullback here. I think that the pieces are in place for continued strength this year. The bond market's been weak. Yields have been heading higher. That money has to go somewhere. There's no reason to think why it won't continue to find a home in stocks. So anyway, so shares of Cummins under pressure today. Name like Caterpillar inside the Dow, also pressure today. The market's bouncing back near highs. A lot of stocks that were weak early are back near highs, but not Cummins and Caterpillar. They're still down near lows. Shares of Caterpillar down $2.83 today, 2.5% to $110.90 a share. You can see it's 10-day, 20-day, 50-day moving average, all pretty much right around the same area here. Its 50-day line is at 110.33, so it's only about 50 cents or so above the 50-day moving average. So there have been signs of professional selling in Caterpillar before today. You can see that back here in early March. Some higher volume declines here. So, Caterpillar looks a little vulnerable up here, and also JOY, Joy Global. Remember, their ticker symbol used to be JOYG. Now it's JOY, but this stock taking a hit as well. And this is an example of a stock. It's a broken stock at this point, no question about it. Another stock that has been, really the institutional selling started in Joy Global back in February. Higher volume declines, really not much in the way of buying demand. The stock has broken through all kinds of support levels. It is down another 4.4% today to 75.90. So is Joy on sale here? I know that the value investors are probably going to eventually go after this one, but this isn't how I pick stocks for my ultimate growth stocks model portfolio. I target stocks showing relative price strength in the market, not stocks underperforming that are being sold by big investors. That is not my idea of what a good buy candidate is. Doesn't mean that you can't make money in Joy Global buying it at its current depressed price levels, but I tend to target strong price performers in the market as opposed to weak price performers. So Cummins, Caterpillar, Joy Global under some pressure today. At last check, some of the other stocks out there with exposure to China. These casino operators that have big business in Macau. Let's take a look at Las Vegas Sands. There's a stock that's still hanging in there just fine. A little bit of selling pressure today. It's underperforming, down 2.7% to 57.51. But this chart looks like a lot of other leading growth stocks out there. Just really no signs of an imminent breakdown here. Still holding above near-term support. Its 10-day moving average still holding above its 20-day moving average, 50-day moving average. So Las Vegas Sands under a little pressure today, not by much. Then you have Wynn, which is sort of a different-looking chart than Las Vegas Sands, more of a laggard price performer. Wynn is after early weakness now trading up near a session high. Wynn Resorts is another company that does a lot of business in Macau off of mainland China. Stock is down $1.21, 0.9% to 128.08. Still holding above key moving averages as well here, and well up off its session lows. So volume today, interesting looking at the volume in the market, even when, pre-market futures pointed toward, a decidedly lower open. If you watched volume as the session progressed, including right now, it was never heavy. Okay, compared to what we saw in the market yesterday. Yesterday, Monday, on the New York Stock Exchange, volume below average at 718 million shares. If things don't change drastically between now and the close, we'll come in pretty close to that level today. NASDAQ volume on Monday also below average, 1.5 billion thereabouts. We're tracking very close to that level as well. So there's a chance we could see a big volume surge between now and the close, but not likely. Could happen, but so far really just didn't see a whole lot of conviction behind the selling today in the major averages. Headed into today, I always check in with the folks over at Investors Business Daily, their big picture column. I keep track of the distribution day count there. In other words, how many times has the S&P 500 declined in higher volume in recent weeks? How many times has the NASDAQ declined in higher volume? Headed into today, there were 6 higher volume declines on the New York Stock Exchange Composite. That's a more broad-based index. But there were only 4 for the S&P 500 and just 2 for the NASDAQ. So that is, generally speaking, fairly limited signs of institutional selling in the market. Just got done talking about Las Vegas Sands, strong chart, and there are a lot of stocks out there, a lot of charts out there of stocks that are holding above support, and that means something. That means something in this market, because if you're bearish and you're expecting a pullback here, and you're expecting Apple to roll over, or expecting some of these other strong performers to start acting weak, you're gonna need to see at least some signs of institutional selling in these names, and to that end, it just really hasn't been happening up to this point. So that's a big reason why I am not eager to move to the sidelines quite yet here. Another theme in the market today, these financials. I mean, the financials just keep on moving higher. Very strong performance in the XLF today. Let's take a look at the Financial Select Sector Spider Fund. Top holdings in this fund include Wells Fargo, JP Morgan, Berkshire Hathaway, Citigroup, of course, Bank of America. That stock is up big today. They denied a rumor yesterday that they were going to have a share offering, but shares of XLF doing pretty well today, up 0.7% to 1590. So financials continue to act very well. You're listening to Breakout Investing on TFNN, folks. Ken Shreve with you. We'll be right back.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks, Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Ken Shreve with you. Let's go to Robert, Chicago, Illinois, wants to talk about interesting name in the field of robotic surgical, Mako Surgical. How you doing today, Robert?
Very good. Thanks very much, Ken.
What's happening?
Yeah, so I own Mako. I'm long since January, around 25.50, and I want to stay in it long. I don't know if that's a good idea, and I'd like to know where would you put a stop in to keep yourself in the stock?
So you're long since January. So I assume you've got a pretty decent cushion here, huh?
Yes, I do.
Okay, well, that's a great trade. What I like about Mako right now, obviously a powerful. I write that newsletter called Breakout Investing. So anytime I see a company with an innovative product that's showing pretty good top line growth in recent quarters, you have a company here that's probably going to continue to make noise in their industry. They do robotic systems, mostly for orthopedic procedures in the knee and things like that. So it's sort of like a minor league version of intuitive surgical. But you had a heavy volume breakout yesterday, good volume expansion. It broke out over a swing point of $40.18. It almost touched, looks like $45 a share today. I'm a big believer, Robert, in letting your leaders run. You don't want to get out of a leading stock too early. So you're fortunate to have a cushion in the stock. I see no reason at all to sell the stock here, and because I'm expecting 2012 to be a pretty decent year for stocks, I'd give this one room to run.
And where would you put a stop?
Well,
or would you not use a stop?
Well, what are you talking about? What's your cost basis? Are you down around $28-30 a share? Earlier than that?
$25.50.
$25.50. Okay. Well, what I would do right now is I would look at it on a weekly chart. I use weekly charts a lot, daily and weekly charts. And on a weekly chart, the 10-week moving average looks to be just over $36 a share, which is about 6 points below where it is now. So I think that would be a level where if you were to see the stock break below the 36 level with volume, maybe you could take half of your position off. That's how I would first go about doing it, rather than get rid of all of it all at once. You've got a stock that is under accumulation here. They're an innovator, and I just love the fact that sales in their fourth quarter sales were up 123% from a year ago, and in the 3-month ago period it was up about 67% year over year. So you had a big acceleration in sales growth, which tells me they're selling a lot of their product, and that's exactly what you want to see when you've got good fundamentals like that and good technicals as well.
Okay, great. Where would you buy more?
Well, at this point, I would consider Mako, positive technical action from here. I mean, so let's say it ends the week right around where it is, around $42, $43 a share. If it were to, sometimes you can get these add-on entry points to a technical breakout. So let's say it closes this week at $42, $43 a share, and then the following week, it stays right where it is. In other words, it closes at 43 this week, and then the following week it closes right around 43, maybe 42.50, 43.50, something like that. And then the following week after that, it's holding its gains. Sometimes price action like that, tight closes after a breakout is still an indication that the stock is being accumulated, and then you can get even more volume that comes into the stock, and it could even break out further. So that's the type of price action I would look for. It may or may not do that, but that could present an additional entry point. And then another entry point would be just if it just moves sideways, not necessarily tight, but maybe it comes in 5-10% off its recent highs, forms a new base for 5 weeks, something like that, and if it does it in light volume and doesn't correct too much, you get a new base that forms, and then you could see price action like you're seeing right now. It could try to break out again.
Great, thanks, Ken. Okay,
Robert, thanks.
Bye.
Yeah, so Robert from Chicago, he's got a good one here in Mako Surgical. The one issue with Mako Surgical is that it's not profitable yet. Not a deal breaker though. Great top line growth, great technicals under accumulation. Like it a lot. We'll be right back, folks.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about technical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. NASDAQ making an effort to go positive here with about 25 minutes left to go in Tuesday's session. Down only a point now to 3,077. S&P 500 down 3 points, 0.2% to 1406. And the Dow lagging a bit, down 52 points, 0.4% to 13,187. Some dead weight in the Dow today. Mentioned Caterpillar earlier today under a lot of pressure due to the concerns about a slowdown in China. No new news there. We know the economy was not going to be able to maintain that 11-12% GDP growth, but BH Piloton came out today and said that it sees iron ore demand in China dropping to single digits from, I think, growth at one point there was 20-25% growth. But Alcoa, checking in on shares of Alcoa today, it is one of the weaker performing components in the Dow. Shares of Alcoa down 1.65% to $10.43. Mentioned Caterpillar. A lot of E&P firms under pressure today as well. Chevron in the Dow down 1.3% to 109.29. Crude oil today took a hit, down 2.3% to 105.61 a barrel. Mentioned the exploration and production group. Your oil and gas producers are where you tend to see some of the strongest earnings and sales growth in the oil and gas sector. Some of the higher quality names in the group that are showing excellent growth in recent quarters. Check out Pioneer Natural Resources here. Stock is down, underperforming quite a bit today, down 4.6% to 106.18, trying like heck to hold its 50-day moving average here. Continental Resources, CLR. This is a former holding in my Ultimate Growth Stocks model portfolio. Recently took profits in this name not that long ago, maybe a couple of weeks ago. It's still holding above its 50-day moving average here. Not out of the question that it could find support, but it's also underperforming today, down 3.8% to 86.32. And finally, EOG Resources, another large cap name in the group. Shares of EOG Resources down not as much as Continental and Pioneer Natural Resources. EOG Resources down 2.2% to 114.84. So oil weak today. Gold also down. Not that much, though, down 1.2% to $1,647 an ounce. Let's check in on the GLD, the Spider Gold Trust. It trades at 1/10 the price of an ounce of gold bullion. Still a lot of technical damage here. Due to heavy volume selling. When you get heavy downside volume followed up by low volume gains, it really doesn't do much to improve an ETF or a stock's technical picture. GLD today down $1.35, 0.8% to 160.24. And Randgold Resources, GOLD, on the NASDAQ. It's also been hurting lately. Stock is well up off its session lows. It hit an intraday low of $100 even. It is now up 53 cents to 102.50, but still stuck underneath its 50-day moving average here. So gold under a little bit of pressure today. Economic data, really busy week of housing data. Earlier today we had housing starts and building permits. Starts fell 1.1% to an annual rate of 698,000 units in February. That compares to an upwardly revised 706,000 in January. Good news is that permits for new construction rose 5.1% to 717,000, the highest level since October 2008. Of course, permits are a gauge of future demand. Tomorrow we've got existing home sales for February, and Friday we've got new home sales. Let's check in on the ITB. I like to look at ETFs. I cover ETFs over at the Street for ETF profits. So I write daily about the ETF market. Shares of the Dow Jones U.S. Home Construction Index Fund also up off its lows. You can see it touched its 10-day moving average here. This is another strong performing ETF in the market here. It is down 9 cents right now to $15.01. It hit an intraday low of 14.76, which was basically right at its 10-day moving average, but is up near its session high. ITB holds top-performing home builders like Lennar, D.R. Horton, Toll Brothers, and Pulte Group, among others. Let's check in on shares of Lennar here, LEN, on the New York Stock Exchange, and that is also up near its session high today, down now just 5 cents to 26.50. Holding above its 10-day moving average. So for people expecting a pullback in the home builders, the charts what I'm seeing in the home building sector is continued signs of accumulation, not much in the way of selling. Now, you look at Lennar here when it recently broke out in this area right here. You can see these blue volume bars here. Stock was under a lot of accumulation, and now the stock is trying to come in, but it's doing so in light volume and holding above support. So not seeing any meaningful sell signals in a lot of the leading home builders. That's a good thing. Yeah, it's hard to believe that first quarter earnings season is about to start. It seems like earnings season has never ended. Companies closed their books on the fourth quarter quite some time ago, but every week there seem to be more earnings reports coming from companies that keep slightly different fiscal schedules. Let's take a look at shares of Adobe today. ADBE on the NASDAQ, the digital media software firm, most known for Photoshop and Acrobat. Earnings down 2% from a year ago to 57 cents a share. Sales up 2% to just over $1 billion. The stock is under pressure today, underperforming, down $1.30, 3.8% to 33.21. It did actually showing great price performance up until today, but the stock undercut its 10 and 20-day moving average. I suspect that 50-day moving average at 31.99 could be a good support level for Adobe Systems. ETF profits over at the street today. I wrote about a software firm that holds Adobe. I wanted to write about some of these software names because Oracle is reporting earnings after the close today. But if you're looking for a software fund that looks pretty interesting here, let's take a look at IGV. IGV, this is the iShares S&P North American Technology Software Index Fund, IGV, on the New York Stock Exchange. It holds Adobe. It also holds Oracle, again, which reports after the close today. Also in the top 5 holdings, you've got Salesforce, Intuit, and Microsoft. So this is another ETF that has really shown great price performance in the market, still holding above its 10-day moving average. It's down 54 cents today to 64.88, but still holding above support levels. Elsewhere in earnings, we're talking about the strength in these financials. Jefferies Group, JEF, has just been a monster price performer. Shares of Jefferies up another 2% today to 19.47. Earnings were down 24% from a year ago to 32 cents a share, but I think investors liked the top line growth. Sales up 4% from a year ago to just over $1 billion. Investment banking revenue at Jefferies up 20% to $286 million. Fixed income revenue grew 7% to $339 million. Stock trading revenue still under some pressure. That fell 23% to $136 million. But investors generally like what they saw from earnings from Jefferies today. Stock outperforming. And let's check in on Tiffany. Another earnings report. Luxury jewelry retailer. Tiffany, nice gap up. It's buying demand very strong in the stock today. It's up 7% to 73.48, a big gap up in price. This is, a lot of people will call this a breakout today because of the heavy volume behind the move, and it did clear a swing point. But this is what I would consider a breakout from deep inside of a base. Typically, when a stock makes a heavy volume move like this, you like to see it do it much closer to new high ground. You can see the rally that took place in Tiffany. But it only rallied up to about $70, $71 a share. Its high is closer to 80, 81, something like that. So this is a breakout from deep inside a base. They did talk about continued pretty decent demand from Asia. Coach is another strong performer in this group, but Earnings were down 3% at Tiffany from a year ago to $1.39 a share. Sales were up 8% to nearly $1.2 billion. So good day of outperformance for Tiffany. Mentioned earnings after the close from Oracle today, and then Thursday is going to be a busy day of earnings as well. We've got names like FedEx, Accenture, Nike, Dollar General. We'll touch on that a little bit later in the program. Let's take a look at some movers today, stocks that continue to perform well. There's some stocks out there that just don't want to go down, and really you have to pay attention to them because strength, it's always important paying attention to strength. Here's a look at Ulta Beauty. Stock is up 1.2% today to 90.70. Company recently reported, I think it was just last week, where the company reported solid earnings, really just not showing any signs that it wants to go lower here. It undercut its 10-day moving average yesterday, but is back above the line. Again, this is a stock that is clearly showing signs of accumulation. A lot of good stories in retail, especially in some of these specialty retailers like Ulta. But that stock is having a good day today. And let's not forget about Michael Kors. This is a recent new issue. I've talked about Michael Kors before on the show. And what they did late Monday, they came out and offered some earnings guidance. They raised their earnings guidance, pretty much guided sales in line with expectations. But same-store sales growth here is really incredible. They said that so far in the quarter, same-store sales are tracking about 35% higher from a year ago. So pretty impressive growth at Michael Kors. You are paying up. I mean, this is a high multiple stock, but growth prospects huge at this company, and it has turned around nicely after hitting an intraday low of 44.31. Shares are recently trading around 47.84, up 5.5% on the day. Still would like to see Michael Kors base for a little while longer here. This is a stock that has a lot of qualities that I like to see, but when you're dealing with a high multiple stock like this, it's best to get it after it takes a breathing period, goes through a consolidation phase. Kors has only been consolidating gains for a little over a week. Normally it takes a good base 4 to 5 weeks to form. So if Kors eventually breaks out to another new high here, I'll let the stock go up without me. I just think it's rather buy this one when it's coming out of a proper base. It's still very early in the base building process for Michael Kors. Let's take a look at shares of VF Corp, VFC on the New York Stock Exchange. Apparel maker, Wrangler, Lee are among the company's brands. North Face, just a whole bunch of brands that this company is known for, and stock technically still looks very good here. VF Corp outperforming again today, up 95 cents, 0.6% to 148.84. The breakout for VFC Corp was right around that 143 area. So at 148, you really can't say the train has completely left the station here. I've talked about a lot of extended stocks in the marketplace. The swing point, I said 143 is around 142.50 back in this area here. So at 148, it's probably 3 or 4% above that swing point. So you've got nice sideways movement here. You're probably not, chasing here by taking a small position around that 148 price level. It doesn't look extended to me, and outstanding fundamentals at VF Corporation. Let's take a look at shares of NetApp, NTAP, another mover today. Heavy volume mover, I should say, outperforming nicely, up 3.1% to 45.41. You had a little mini breakout for NetApp over 44.14. It's going to be its intraday high right here, so nice breakout over a swing point here in volume. Compelling price action from NetApp. And let's also take a look. Fertilizers doing well today. Agrium, AGU. Pretty symmetrical breakout here. This is, you see, 3 straight days in a row of above average volume price gains. Agrium clearly under some accumulation here. Shares of Agrium up 1.8% to 88.28. The swing point for Agrium was 86.62. Clearly not chasing the stock here. It's only about 2% above that swing point now, so good technical breakout for Agrium. They make nitrogen, potash, and based fertilizers. CF Industries also acting well in the group. Probably consider CF the highest quality name here, trying to firm up at its 50-day moving average. Stock is off its highs, up 43 cents to 183.60. That's CF Industries, CF on the New York Stock Exchange. All right, folks, you're listening to Breakout Investing on TFNN. Back with the final segment in 4 minutes.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing Breakout's gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more, and that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion, and for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk and you get all the benefit. Go to the homepage at TFNN.com and sign up today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's just wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing on TFNN. Ken Shreve with you. Yeah, folks, don't forget, if you want to get a a free 30-day trial to Ultimate Growth Stocks. That's my weekly newsletter at TFNN. You can do that right on the homepage of TFNN.com. Click the Newsletters tab at the top of the page, then click Investment Newsletters. You can try it free for 30 days, and all of my information at TFNN.com is available. Just go to KenShreve.com, and that'll take you over to the site, and you can read all about the newsletter. You can listen to the show live every Tuesday and Thursday when I do Breakout Investing. So check out the newsletter, 30 days free. I update every Tuesday, so my latest update went out earlier today, and then I send out email alerts in between, buy alerts, sell alerts, sometimes just market updates. Let's check in on shares of Apple today. Apple, I think Apple hit an intraday low today of 582. All right. I had another service that said it hit an intraday low of 570. 582 seems more reasonable, but here's another stock that's up near its session high, now up $4.40, 0.7% to 605.50. Just another stock that's not really flashing anything in the way of sell signals. Of course, the news yesterday from Apple, they're paying a quarterly dividend of $2.65 a share, and they also announced plans to buy back up to $10 billion in stock. Looks like the iPad 3 is enjoying strong demand. During the first few days it's been on sale, 3 million units sold. So Apple continues to perform well. Let's take a look at Priceline, another big leader out here that doesn't want to go down either. There are just so many strong performing growth stocks that are just not flashing anything in the way of sell signals here. So that usually is a way you can tell when a pullback is approaching. You start to see subtle signs of institutional selling in a stock or in an index. But shares of Priceline well off its session lows today, down $1.51. That's only 0.2% to 695.42. This has been a big winner in the Ultimate Growth Stocks model portfolio. Just don't see any reason to get rid of this holding at this point, not when it's holding so well above support levels. Shares of F5 Networks, FFIV, also acting well in this market. Stock is under a little bit of pressure today. It did gap down today, down 2.4% to 129.56, but again holding well above its 50-day moving average at 123.10. So another strong performer. Came across a new issue today that I had never heard of before. They actually reported earnings, ticker SLCA. The chart's going to look a little funny here in my charting service because it's a new issue. Not too bad. But the company is called U.S. Silica Holdings. They went public in February, just last month at $17 a share. They reported earnings today, up 257% from a year ago to 25 cents a share. Sales up 41% to $83.6 million. The company sells commercial silica and industrial mineral products. Its largest market is basically proppants that are used by the oil and gas industry in that process known as fracking, where they blast chemicals and water and sand down into shale to release natural gas and oil, these types of things. So this is a company that could be well positioned for growth. It is extended now. I wouldn't buy it here, but a new issue that could present a new entry point when it bases and consolidates gains for a while. All right, folks, coming up next, the Tom O'Brien Show on TFNN from 4 to 6 Eastern. Be sure to listen in to Tom get his take on the market. Watching for earnings from Oracle after the close. Earnings expected to rise 4% to 56 cents a share. Sales up 2.5% to $9 billion. Have a great afternoon, everyone.